Yeah, I want to follow up on our stories from yesterday, of course, involving Xerox's bear hug for Hewlett-Packard, or HP Inc., actually. Can now give you some of the terms that were involved and what the letter actually contained with the offer that was sent to HP on Tuesday. We did get a statement from HP yesterday, which I'll share in a minute, but let's get to the offer itself, because people close to the situation indicate it was for $22 for each HPQ share, $17 of which would be in cash, and 0.137 Xerox shares for the remaining. So you're talking roughly a 77% component of cash, the remainder in Xerox stock, a stock of which, of course, is up sharply over the last year, contrasted with HPQ, which was near its recent lows until, of course, news of this potential bid made its way into the marketplace. They're talking about as much as $2 billion in expected cost synergies. And by the way, given the cash and stock component, what you would end up with at the end is a new company that would be 48% owned by current Hewlett-Packard shareholders, 52% by Xerox. Why is that important? Well, Xerox is going to play up the fact that they believe their management team is the right one to deliver on these $2 billion in expected cost synergies, and would have the effect, they say, of course. And by the way, their management team is comprised of a lot of ex-HPers. I think there's at least 5 in the senior management team alone, including CEO John Valentine, who I think ran services there at HP. But at close, you are talking about a highly levered company. Now, they've talked about, in fact, I reported yesterday, they believe it would still be investment grade, but it would be roughly 5 times levered, given, of course, the debt that they would be adding to buy what would be roughly $23 billion or so in stock, the 77% component that is cash. Perhaps it'd be a bit more than that. The price itself, 22, although interestingly, Xerox share price up yesterday, along with shares of HP. We don't see that often. Is it a result of an embrace by all shareholder bases of the combination? And by the way, there is a decent overlap in the shareholder bases of both companies, not something to be overlooked. Or is it because, in part, some people also believe that Xerox could find itself on the receiving end of a takeover bid from HP, given the huge discrepancy in relative size here of the two companies? Unclear, but they were both up. That obviously does have the impact of raising the actual price being offered, given 0.137 Xerox shares would be exchanged for roughly 23% of HP. They do expect to delever very quickly. Talking about the cash flow generating characteristics of this combined company, being able to take leverage down from what would be 5 times at close to as little as 3 times within 24 months. So we can tell you at this point that is, according to my sources, the offer that was delivered to HP. What did HP have to say about it? They put out a weird statement.
No, it wasn't that weird.
Oh, it was weird.
It was not, because I've worked on this.
Really? It was weird.
Yes, I worked on it.
Yeah, okay. Well, you know what I'll say then?
It was a Heisman.
What I will say is it was out of character in a typical takeover situation.
Well, it was not. It was
seemed to me to have been written perhaps by a philosophy major rather than somebody who's actually focused on business.
I never took philosophy.
That said, they did say that most recently they received a proposal that was transmitted from the company, and then they went on to say they have a record of taking action if there's a better path forward, and will continue to act with deliberation, discipline, and an eye towards what is in the best interest of all their shareholders, Jim.
Okay, so January 2018, they made a bid. Suggested temporary, well, kind of like a fungible bid, 2018. At that point, Xerox was involved with unwinding the Fuji deal.
Right, which there was no way for them to buy it.
Okay, so here's what
I understand. The crown jewel lockup that was part of the Fujifilm joint venture.
My sources indicate that while they're certainly open to anything that benefits shareholder, Enrique Lores put out together a plan. I don't know if you got a chance to do the plan at the big analyst meeting, and he wants a chance to be able to put the plan through.
Right.
And I don't blame him one bit. The plan, by the way, is much more about getting away from printers than it is to go deeper in printers. Mm-hmm. Much more what I regard as a digitization play, hardware digitization. That is not what you get if you merge with Xerox. So they're kind of don't want to do in terms of strategy, but nobody denies that there wouldn't be substantial synergies. Whatever, and they'll do what's
there
right.
would be substantial synergies. This is, of course, a far smaller company going after a far larger
so
one.
It would be reversed.
That was recently at its lows. They are talking about that price at 22 being roughly a 29% premium to the VWAP for the shares over, fairly recent periods. So not an insignificant premium, as was indicated to me yesterday.
Right.
Real, significant. We can debate whether it's enough, certainly, to move the ball here. What I will tell you is I do sense, Jim, that there is great fervor on the Xerox side to try to make this happen. January 24th, I believe, is the close of the nominating window for HP's board of directors, all of whom are up. Would they move to a proxy fight? I certainly can't dismiss that as a possibility at this point, though it's unclear what their shareholders, and don't forget there is overlap. That always does prove to be an important part of the strategic merits of these kinds of deals and how they're going to be considered. But whether or not those shareholders would agree at 22, very much unclear.
The statement and things that I've learned indicate to me that there's zero animosity, which would therefore surprise me for a proxy fight. I think that they just want Mr. Loris to have a shot here. Remember, Dion
There's any chance that Hewlett-Packard would just say, let us buy you?
Yes. I do think at a certain point. It's not in their plan, though.
Right.
So we got to give Mr. Loris a couple of quarters. Remember, he took it over by surprise because Dion Weisler is retiring right now because of a family health issue. I think that if Mr. Loris had not laid out the plan, if they had done this right when Dion said he's done or he's going to leave, I think it would have had a much better chance. But Mr. Loris has a pretty defined plan.
Well, in part, Xerox couldn't do it until they actually had the $2.3 billion in cash coming in. They do have a highly confident letter from Citi to finance the deal. It would be a lot of debt, as we said, although the cash flow.
It would be the other way, I think.
Combination
but they're not enemies. It's not an Elliott kind of Nielsen thing.
I still say that was a weird statement.
It was weird, so that's why you had to,
Oh, you agree now it was weird?
No, it's not weird in the context.
I've covered about 1 million M&A situations.
I've covered one.
Weird letter.
This one. And it was not as weird once you start realizing that they were trying not to be angry.